You've probably used one, right? Those commission-free trading apps. You tap a button, you buy a stock, and that's it. Zero fees. It feels a little bit like magic. But as we're about to find out, there's a really fascinating business model working behind the scenes. And trust me, it is definitely not magic.
This quote, man, it just cuts right to the chase, doesn't it? If you're not the one paying, then who is? And what exactly are they buying? It's a puzzle that kind of challenges our whole idea of what free means. And today, we are going to solve it.
So this is it. This is the big question. Let's forget about magic for a second. There's a real, tangible answer to this. And to find it, we've got to do what you always do in these situations. We have to follow the money. And that journey starts the second you hit that buy button. Okay, our investigation starts with our first major clue. This concept called payment for order flow. You might see it as PFOF. Now I know it sounds super technical and complicated, but it's actually the engine that powers this entire free trading world. So what is it? Put simply, your broker, the app on your phone, gets paid for sending your trade to a specific type of company called a market maker. Think of market makers as like the wholesalers of the stock market. So your broker isn't making money directly from you. They're getting paid by this other company for the right to handle your trade.
Let's walk through it. It's really just a 4-step dance. Step 1, you decide to buy a stock. Step 2, your broker doesn't actually execute it. Instead, they send or route your order to a high-speed market maker. Step 3, that market maker pays your broker for sending them that order. And then, and only then, step 4, your order actually gets filled. So let's meet the main characters in this little drama. First, you've got you, the retail investor. Then there's your broker, who's really acting as a router, just directing traffic. And finally, the market maker, the high-speed trading firm that's basically buying all of our orders in bulk.
All right, so now we get the process, right? But here comes the breakthrough moment. How on earth does this system make enough money to let millions of people trade for free? It's time to follow the money. Now here's the wild part. We're not talking about dollars here. We are talking about a minuscule, teeny tiny fraction of a single penny for every share you trade. It sounds like basically nothing, right? How could that possibly be a real business? And that is the the billion-dollar question. What happens when you have millions of users all making millions of trades every single day? Well, those tiny little fractions, they start to add up. And believe me, they add up in a very, very big way. The power of scale is just absolutely mind-blowing. Check this out. In 2022, a staggering 64%, almost 2/3 of Robinhood's total revenue came from these tiny payments. All those fractions of a cent added up to hundreds of millions of dollars. And suddenly, free starts to make a whole lot of financial sense. And this right here brings us to the big reveal. We've followed the money, we've seen who's involved. Now, let's finally connect all the dots and go back to that quote we started with. What we've seen is a fundamental shift in the business model. Traditionally, you paid a broker a commission, a fee, to execute your trade. The relationship was between you and your broker. It was simple. But with this POFF model, the broker's real customer is the market maker. So the product isn't the stock you're buying. It's not your money. The product being sold is the data stream of all our trades combined. It's our order flow. And why is that so valuable? Well, market makers profit from the tiny difference between a stock's buy and sell price. It's called the bid-ask spread. And when they can handle millions of our small, predictable orders, they can capture that tiny profit margin over and over and over again. Our order flow is the raw material for their entire business. Understanding this isn't just an interesting little factoid. It has real implications. It forces us to kind of step back and rethink what cost and free even mean in our digital world. So here's the trade-off. For you, you get to trade without paying a direct fee, which is awesome. For your broker, they get a massive, reliable source of revenue that keeps the lights on. And for the market makers, they get exactly what they need, a steady, predictable flow of retail orders to run their business on. And that really brings us to the final thought here. The next time you use a free service, and it doesn't matter if it's trading or social media or a search engine, just ask yourself this question. If you're not paying with your money, what are you paying with? Because as we've just seen pretty clearly, nothing is ever truly free. The currency just might be your data, your attention, or in this case, your order.
Subscribe and like. You may share too. Top our next video to learn more.